it's been a very strong performance coming in from HDFC Ltd. This is the India's largest mortgage player, and they have reported a beat in terms of the net interest income, a beat in terms of the net interest margin, strong growth in terms of the individual loan book business, and also largely stable asset quality given the context of the impact of COVID pandemic. Quickly, in terms of the net interest income, well, its net interest income has risen nearly around 26%. The margins on a 9-month cumulative basis have expanded to 3.4%. This is a 10 bips expansion versus the first half of FY21, and management did state that part of the margin performance or improved margin performance is on account of reduced liquidity surplus. Not just that, we're also seeing a fairly strong growth coming in terms of the individual loan book business, wherein the disbursements have grown nearly around 26% on a YOY basis, and the share of the individual loan book now has risen to 76% in Q3 versus 75% in the last quarter. Management states that they have gone ahead and it's been a conscious call on their part to be very conservative and to go very slow in terms of the non-individual loan book, and hence we are seeing fairly high growth coming in terms of the individual loan book. Overall loan book growth has been at nearly around 13%. Do recall the last quarter loan book growth was at 10%. Not just that, the collection efficiency also in the individual loan book is nearing pre-COVID levels to nearly around 97.6%. This stood at 96.3% in the last quarter. If you're looking at the overall asset quality as well, given the context of impact of the COVID pandemic, HDFC Ltd reported GNPAs in fact has come down to 8,000 crore during this quarter versus 8,500 crore in the last quarter. Reported GNPAs have come down to nearly around 1.67% versus 1.8% in the last quarter, and reported and individual book GNPAs stand at 0.79%. Management, of course, holds a huge amount of provisions in far excess than the regulatory requirement. However, there has been slight rise in terms of the Proforma GNPAs. Proforma GNPAs have slightly risen to nearly around 1.9% versus the 1.8% in the last quarter. Proforma individual GNPAs stand at 0.9% versus the 0.8% in the last quarter, and Proforma non-individual GNPAs stand at 4.35%. Do note that Proforma GNPAs is nothing but those accounts which are under moratorium, and we are still awaiting Supreme Court's final verdict. These are the accounts which remain standard as of 31st of August 2020, and these are accounts still standard in the books of all the financials BFSI players until we do see a further Supreme Court verdict on the same. If we are looking at the overall commentary also, it's fairly positive. Management did state that the unaccounted unrealized gains stand at nearly around 2.5 lakh crore, and the overall COVID related provisioning and the total provisioning stands at in excess of 12,000 crore. This is nearly double of the regulatory requirement, and management has been fairly cautious in terms of overall provisioning. So yes, I would say that it is a good result. It's a good quarter for HDFC Ltd. Do not go by the reported profits, although the reported profits are showing a very sharp decline. The reason being is it is not comparable on a YOY basis, because the same quarter last year did have a gain of over 9,000 crore coming in on account of the Gruh finance merger with Bandhan Bank. So overall, a good quarter for HDFC Ltd.